This is Craig Haugard with your Financial Issues Ag Update for March 15th. Well, corn ended the day a little bit higher in the spot month on Friday with the new crop contracts lower for the session. Now, traders spent all week last week anticipating the announcement of a sale to China, but we never got that. For the week, however, we did see ethanol margins improve by another 5.5 cents, and that helped provide some support to the corn market. Now, we do have a big change starting today in corn futures with the new Chicago Mercantile Exchange aggregate position limits going from 33,000 contracts to 57,800 contracts per entity. That's a 75% increase in positions that funds can hold in the corn market, and that may make funds an even bigger player in determining the direction that corn prices go. Ultimately, the fundamentals of the market win out, but this could bring increased volatility into the marketplace. In South America, Brazil's second crop corn planting pace has really picked up some steam. They got 22% of that crop planted last week and now have 75% of the crop in the ground. A year ago at this time, 89% of the crop had already been planted. Soybeans closed lower as they were driven in large part by a Chinese story that's featured a collapsing soybean meal market. Crush margins for China have improved slightly but remain negative. Looking at South America, traders are still expecting Brazil to have record production. In Argentina, we continue to see the crop slip, with only 6% of that crop now rated as good to excellent. The Rosario Grain Exchange dropped their crop estimate by 4 million metric tons down to 45 million due to a lack of rain that's been plaguing that nation. The winter wheat classes were lower, while Minneapolis finished mixed on Friday. Winter wheat was pressured by a forecast which shows that the next 10 days should benefit the Southern Plains, Midwest, and Western winter wheat crops here in the U.S. On the international front, Russian wheat values dropped by $3 per metric ton on Friday. And in France, the soft wheat ratings continue to be steady at 88% good to excellent. That's 25% better than what they were rated at just a year ago. Cotton futures were softer on Friday. At the close, the May futures were 79 points lower, settling at 87.56. Livestock futures were mixed. At the close, we had the April live cattle 47.5 cents higher, while April feeder cattle were $1.95 better at the closing bell. Lean hog futures retreated slightly. April futures finished the session a dime lower. Class 3 milk futures were weaker to end the week. At the close, we had the April futures down 38 points, settling at 17.71. And meat cutout values were mixed. Choice box beef was 80 cents lower, closing at $225.87. Select boxes were 20 cents higher for the session as they settled at $220.27. And pork carcass cutout values ended the day $1.39 lower as they finished the session at $98.30 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.